Gold is kind of like a backup currency for if the system collapses. Now, if you are a central bank and you issue your own money, the last thing you're going to say is that that currency can collapse, right? So maybe they see the unsustainability of the current system. So slowly they're talking about a potential shift back to gold. And you can't say this all at once in one day, or markets would be shocked. If you go back 120 years and you draw those ratios, you can more or less see what is healthy and what's an average. And we're now very low. Gold makes up only a very tiny part of foreign exchange, historically speaking, also relative to total debt, equity markets, etc. And especially against money in circulation. So if you go to $8,000 per troy ounce, it would be more balanced, historically speaking.
Can we see a new gold standard, and would it be a solution for our current monetary problems? Today with me is Niewenhuij. He is an analyst who's known for writing about gold, central banks, and everything connected to precious metals. Jan, first of all, it's good to see you. Thank you for your time.
Thanks for having me.
Great. So Jan, not long ago, I have referred to your article called Dutch Central Banks Admit it has prepared for a new gold standard in one of my videos. As you know, I do videos, I educate people about gold, money, and mining stocks. But before we start digging deeper into the topic, could you please give our viewers a little bit of an overview? What do you mean when you're talking about a gold standard? And can you give us a little bit of history on that, please?
Well, gold standard, I think most people, when they think about a gold standard, it refers to the classical gold standard, which was from 1875 until the First World War. There have been gold standards, many gold standards before and also after that. But usually what people mean with a gold standard is that the national currency, for example, dollars or German marks or euros, are tied to the supply of gold that the central bank has. So the currency in circulation is backed at a fixed parity to gold, and then the notes are redeemable to maintain the peg. And so it's a system, it's a monetary system that has a sense of discipline in it, because they can't just print money. They can actually, because they can lower the amount of gold backing the monetary base. But it's basically a system of discipline. It's also an international system, because if multiple countries are on a gold standard, then they have fixed parities, fixed exchange rates, and they can trade with each other with gold. And it also has a self-correcting system, because if gold flows out of one country, they raise rates to get the gold back in, so they don't suffer deflation. And so it has a self-correcting mechanism in it. That's usually what people mean when they say gold standard. Now, there are also other variants to the classical gold standard, such as the gold coin standard, that people can take mining output and go to the mint and have coins made, and then they spend them. And there is also something, and maybe we're going to talk about this, which is called a gold price targeting system. But maybe because I know you have some other questions, and I think I can better explain it later on, because that is a bit my theory about where we might be heading. But let me tell it later.
Okay, that sounds really interesting. I'm looking forward to that. But as we said before we dive in deeper, let's suppose we go back to a gold standard. What are the current problems we have in our monetary system? I mean, besides that we can print fiat money overnight, right? And what kind of problems will be fixed in our monetary system? Is it a fix for everything if we go back to a gold standard?
No, it's not a fix for everything. There is no perfect system. It's, economics is a very fluid science. I mean, we're still, the central bankers still are, they admit they don't really know how inflation works and stuff like that. So, and I don't pretend that I have all the answers, but some problems we see now with a purely fiat standard is that they can print money in abundance. This leads to asset bubbles, inequality, and also a zombification of the economy, because normally back in the day, so to say, you had creative destruction. So, when a company didn't make any profit, it wasn't bailed out by the government or central bank. It just collapsed. And then the resources that company used are being freed by companies that are more profitable. So you get the most growth out of the resources at your disposal in an economy. Now, with that gone, because the name of the game is bailout, they bail out banks, they bail out companies, they lower interest rates, whatever, anything to keep the show on the road. You don't have creative destruction, and that, to the detriment of economic growth. So it's now, you can see very high debt levels, I call it debt saturation. That the debt levels are so high because of the bailouts that you get lower growth and all sorts of problems.
All right, that sounds good. Let's talk about your article. As I already said, it was called Dutch Central Bank Admit It Has Prepared for New Gold Standard. Let's go into more detail here, because that sounds really interesting, and this is why I got aware of you, right? What exactly happened here? What has the Dutch Central Bank done? And why should we look at what the Dutch Central Bank is doing? Could it be something that every country could be interested in? I mean, some viewers would be telling, why should I look at the Dutch? The US is the world leading country. So give us a little bit of background here. What happened and why is it important?
Well, first of all, yes, the U.S. is the world superpower and also the monetary power. The U.S. dollar is the world reserve currency. But what happened after World War II, the West, so that was basically Europe and the U.S., got out of World War II and they started trading, and they had this system called Bretton Woods, which was a gold exchange standard. So basically, the countries could have all the exchange rates were fixed. The countries could have gold as in their international reserves to back their currency and to also intervene in foreign exchange markets. But they could also use the dollar, which was redeemable for gold. And then, of course, the US started printed more and more dollars than they had backing those dollars, gold backing those dollars. And so the system came under strain. And then in 1971, President Nixon gave up the convertibility of the US dollar. But Europe, and I'm not talking about China and Russia at this point to make matters more simple, but Europe still had a lot of dollars, right? And they couldn't redeem those dollars anymore for gold at the US Treasury. And the gold price was going up. So their dollars were becoming worth less. So there was a bit of a fight between, and I've written several articles about this, there was a bit of a fight between Europe and the US, and Europe very much wanted to get back to a system based on gold. And the US, of course, didn't want to, because they knew they had, much more power if all the world would accept their dollars and save in dollars and trade in dollars, and, would affirm their military power. Mm-hmm. Okay, so but the Europeans were also, and Germany especially, was very sensitive. They were protected by the US. So Russia was or the communists were in your country, and the United States was protecting Germany, and so they could say to Germany, which was very prosperous after the Second World War, they could say, we want you to buy U.S. government bonds and not gold with your trade surpluses. And Germany had to, because if the U.S. were threatening with withdrawing the troops, and then hell would break loose in Germany, or they would be invaded by Russia. Mm-hmm. So long story short, Europe had to play along with the U.S. in the 70s and also the 80s. But they started, I think, it's a very long analysis, but they kept in mind this whole gold thing. And then in the 90s, they started selling gold. But what happened is that only the let's say medium-sized countries started selling gold, and not Germany didn't sell much, France, Italy, not. And if you look at it, what they did was equalizing their gold reserves. Mm-hmm. Relative to GDP, so not relative to their monetary basis, but relative to GDP, because GDP is a real thing. It's production capacity, and monetary basis can also be printed out of thin air. So what they were preparing for is a potential shift back to gold. And I don't think this was all written down in documents and agreed and whatever, but they just kept it in mind. And you can see from several internal documents that have been declassified, et cetera, that there certainly was this trend. But it didn't. They were not very vocal about this, let's say in 2005, because things were pretty good, and central bankers like to be in control, and if they don't have to go back to gold, they think, oh, then we have better and more control, good for us. But then, of course, the great financial crisis in 2008 happened, and a couple of years after, central banks like the Dutch central bank, but also the German central bank, and also the central bank of France, and also the Italian central bank became more vocal. If you read on their websites, they're very much pro-gold, actually. And also what they did after 2008 is refine all their, we noticed from Sweden, Germany, and France, that they brought all their gold up to current wholesale industry standards, like in preparing for using that gold. So a lot of things changed. It's not only the Dutch central bank, but the whole of Europe became kind of like admitting it is pro-gold. And for example, in my country, because I watch television here, and I sometimes I look on the website of the Dutch central bank. They began stating that their gold is kind of like a backup currency for if the system collapses. Now, if you are a central bank and you issue your own money, the last thing you're going to say is that currency can collapse, right? So they're slowly talking about, because maybe they see the unsustainability of the current system. So slowly they're talking about a potential shift back to gold. And you can't say this all at once in one day, or markets would be shocked. So they do it gradually, and also in Eastern Europe, some countries that are coming into the euro as well, or some countries in the EU like Poland, that is not part of the eurozone. But anyway, all those, Poland, Hungary, Romania, they have been buying gold. If you just look at it, it's like the whole of Europe is anticipating a potential, let's say, return to a gold standard. Now, I don't know exactly what the question was, but maybe this is the answer.
No, it was exactly the answer. But maybe we can, because you already said the way they communicate it, right? They can't just go on television and be like, oh, our currency is collapsing, we have to go back to gold. So this could be my next question here, Jan. How do you think all of this could happen? I mean, what is the transition from the current fiat system, which is obviously not working any longer, to a gold standard? It probably won't happen overnight, right? So what could be a progress? What are your thoughts on this? How could we go back to a gold standard?
Well, I don't think it would happen overnight, because it could, if there is a crisis, and then they could implement it. They could, usually it happens in the weekend, because they can close the banks and whatever, and they have 2 days to negotiate, and then they do something. But they rather not. But if a crisis happens, and we can also see it, with the debt of Italy, for example, there are very serious problems. And now also Germany, by the way, is also a bit in trouble. It used to be the strongest economy of Europe, but the Bundesbank is making a loss, and So what could happen is that they say one day we're going to revalue gold. On the balance sheet of central banks, not only in the free market, but also on the balance sheets. Then they have a lot of, let's say, unrealized gains on that gold. And then they could write off debt on their balance sheet, because now all the debt in the society, if there is a crisis, is being channeled to the central bank, right? So first the governments, they save the banks or companies or whatever. Then the central bank buys the government debt. So all the debt accumulates on the central bank balance sheet. So a way to reset the system would be to write off that debt with your unrealized gains on the balance sheet. Now, the next step would be, because economic agents or people in the economy would think, okay, well, we just had that, so what now? And they could stabilize their currencies in terms of gold. So, and this is what I was referring to, a few minutes back, to a gold price targeting system. Then they wouldn't implement the classical gold standard again, because then you have to change the law, and in the law it would say, a euro is defined as so many grains of gold, etc. And the problem with, just a side note, a problem with the classic gold standard and also with previous gold standards is that eventually mankind always needs more liquidity.
Mm-hmm.
So either it's a war, or it can be a pandemic, or whatever reason governments find, there will be a moment they need more money, more liquidity.
Mm-hmm.
So then they have to, change the laws of the gold standard, or whatever standard they have at the time, and say, well, there is now less gold in our currency, so the gold price goes up and they have more money at their disposal. So an easier way, I think everybody knows this by now, right? This is just a fact of life. So what would be a more logic gold standard system is if they say, we're going to target the gold price in the free market. So for example, the Euro system could say, we're going to target the gold price at 200,000 euros per kilogram. Mm-hmm. That's going to be, and we're going to buy and sell gold, and with interest rates, we're going to, that will be the... And then the US and China would do the same, and that would be a gold standard, because then you also have fixed parities. And if, the proverbial shit hits the fan, it can really easily devalue against gold to create liquidity again. You don't have to change the law. You can just devalue against gold. Now, you may say, so what's the whole point of this gold standard if there's no discipline? Well, if people know this, they have a choice. They can save in gold and, let's say, bonds. The bonds, they yield, the gold doesn't, but the bonds risk of being devalued against gold every now and then. So then you get a self-correcting mechanism with checks and balances on the government. And that could be a system I'm thinking is maybe likely. So then, the great superpowers, they all target the gold price. Maybe the smaller economies target, for example, the dollar or the euro, their largest trading partner. And it could look like that.
Okay. Jan, thank you very much. So you already said in order to have a gold standard, we have to reevaluate the price of gold, right? We have to check the new price of gold, basically. What could be a price of gold in the future? What is your personal target? I mean, obviously, this is not an investment advice, but where has the gold price to be in order to have it possible to have a new gold standard? Do you know what I mean?
Yeah. So, like I just said, in order to go there, for example, would be, this reset, and then you move to a gold standard, and simultaneously you can cancel the debt. So you're more or less, you reduce the debt levels, and you have a clean slate, and you can start over with a more prosperous or healthy economy. Mm-hmm. Now, I think that I don't know exactly, but I did an estimate once, and it was $8,000 per troy ounce. Because you can see, I do a lot of studying in ratios between gold and debt levels, and also the value of equity markets. And also how much money is in circulation. And in those ratios, you can see, if you look at it 120 years, if you go back 120 years and you draw those ratios, you can more or less see what is healthy and what's an average. And we're now very low. Gold makes up only a very tiny part of foreign exchange, historically speaking, also relative to total debt. Equity markets, etc., and especially against money in circulation. So, if you go to $8,000 per troy ounce, it would be more balanced, historically speaking.
Okay, and how possible is that? I mean, people in the gold industry are basically talking for like 20 or more years about the gold price has to explode, right? Because of the monetary system, because of our problems, and obviously a lot of people are buying gold, and they are, let's face it, a little bit bored of people like us telling that the gold price has to go up that much. So, what can you tell to the people that are, well, criticizing those kind of price targets?
Yeah, well, good for them to criticize people like me, because you have to keep your own mind on it when you're investing. No,
Mhm.
I'm not saying I'm not a person that goes all in on gold or Bitcoin or whatever. I'm just, yeah, I'm a gold analyst, so I emphasize the benefits of gold. Historically, how what's the place of gold, you know, where we are in terms of, you know, historic cycles. um, yeah, it can be they can be a bit bothered, but you know, when it comes to gold, gold is the least sexy asset out there. You know, it doesn't yield. I mean,
Yeah.
it's ancient, so don't expect to become a millionaire with gold. You know, just gold is an insurance to your investment portfolio.
Mhm.
You know, investing is about, you know, buying stocks and taking risk and whatever, and finding a yield. This is about the fundamentals. I would say the gold underpins the global financial system. So if it, you know, goes out of whack, if there's too much risk in the system, then the gold price goes up, and then if you own gold, you're hedged in that sense. But certainly don't put all your money in gold. You know, I mean, most clever people say put 10% or something in gold, and you know, if things go horribly wrong, then you're hedged. But don't go waiting on this price to explode. I have my opinions, you know, and I share them with my audience. But and there are also, I think it's good for people to know that there are a lot of people on the internet that believe in, let's say, conspiracy theories or something. They really are gold sellers. They write stories about, you know, it's the world's going to explode tomorrow. Buy gold, click here.
Mhm.
And of course, then they exaggerate, and there is no internet police telling them it's just nonsense what you're saying. So that gets spread, and there's a lot of misinformation about gold on the internet. So, you know, I always like to present a lot of charts and data and clear analysis on that. But yeah, do your own research.
Yeah, right. Absolutely. Thank you very much. So let's go back to the topic of gold standard, right? I mean, you said that probably the European central banks are trying to equalize their gold holdings ratio to GDP. But what would happen to the countries that don't really have gold at the moment, or that have a bad economy and don't really can get gold, right? I think there are a lot of countries out there that don't really have gold. Would they be cut off from an international transactions basically instantly as soon as we have a new gold standard? How could these countries deal with that?
You have a few countries. Yeah, you have a lot of small countries that basically all central banks have gold.
Mhm.
That's for sure. Now they don't all have exactly the same amount relative to GDP, but you know, if you look at the charts, they are trying to get there. Strangely, you know, although some are enemies. Of the developed countries that I know of, only Canada, Norway, and Israel don't have gold.
Mhm.
And for example, Norway, yeah, they have a lot of foreign exchange. They have these oil funds, right? So if they want to participate in a new system, they have to buy in, maybe at a higher price. So that
Mhm.
sucks for them. But yeah, they could buy in, and well, it all has to do if they have any international reserves. You don't have to have it right now, but if you can buy it, then you can still participate, because in the system I just described about the gold price targeting system, probably international settlement needs to be done in gold, right?
Mhm.
So now you see a lot of trade imbalances, which is also facilitated by the global gold dollar standard. Sorry, and I think what what might happen. And you see this also, some advisors or Trump are, I think, when I listen to them, are suggesting that they want to devalue the dollar. So they get rid of their current account deficit. Mm-hmm. Also because the voters on Trump are from the Midland and they want to have a job again. And the whole industry in the Midland is gone. It's all outsourced to China. So if they devalue the dollar and get more industry back again in America, Trump's voters are happy again. And you also get rid of these massive trade imbalances. And then you can settle your trade with gold again, because that would stabilize it would confirm the balances.
Mm-hmm. Okay, that's interesting. Let's talk about a country which is not really considered to be a rich country, but also has come back to a gold-backed currency, Zimbabwe. They have a new currency, as I said, it's called Zimbabwe Gold. And what is your view on this decision of the central bank? Is it something that would help Zimbabwe? I mean, I think they had 6 currencies since the banking crisis 2008. They had hyperinflation basically every year. It got extensive high. So would it be something which is helping right now Zimbabwe? Or how do you view on all of this, what is happening over there?
Well, yeah, they are suffering from a lot of inflation every time they issue a new currency. And what they could do is just stop printing money. It's just as simple as that.
Yeah.
And you also see now with this, they call it the Zimbabwe gold dollar, or whatever, the ZIG, ZIG. Mm-hmm. But I just looked up on X, and there's this economist, Larry White, and he was reading some documents on the website of the Central Bank of Zimbabwe, and there's nothing there in the documents about that the currency is redeemable in gold. They say, yeah, we have 100% of the monetary base covered in gold for 75% and 25% in foreign exchange. Okay, great. But if it's not redeemable, it doesn't mean a thing. They could print money again. And what we see already is that indeed on the black market, this new currency is already losing value. So that shouldn't be the case if it's redeemable, because then you have an arbitrage opportunity. So I don't expect much of this new currency. And again, you can do it with gold, and it helps. And if you write it in the law, maybe it helps even more. But yes, Zimbabwe could also just stop printing money, and then things would be a lot better for them.
Yeah, absolutely. But why are they constantly printing money? Do you know why this is happening?
Corruption. It's just there's just no. I don't know if corruption covers is the correct word for it, but it's kind of obvious. Just like Argentina, I mean, they have all these busts and inflation all the time. There's only one reason for the inflation, and why people also in Argentina, for example, always want to have dollars or whatever, is because they print. The government spends too much money. They print too much money, and that's why you get the inflation. If they stop doing that, you could stabilize the economy, and yeah.
Yeah, okay. Yeah, that would be a good thing for a lot of people in the world. This is why I think so many people are hating the fiat system, right? Because it causes inflations, which is bad for the people, right?
Yeah.
So for last but not least, let's talk about, let's say, a group of countries which could be a little bit more powerful than Zimbabwe is. The BRICS, right? Brazil, Russia, India, China, South Africa. And now we have, I think, 5 more participants being part of the group. There is always lots of rumors about a potential BRICS currency, which could be backed by gold to gain trust, right? And to become the world leading currency, because everybody sees the conflicts between the Eastern world and the Western world. And we think, sure, there is war, which is totally a bad thing, but probably the power wars will be led by currencies, gold and money. So is it something which could be possible? Could there one day be a BRICS currency? How could it look like? Is it really a thing in your opinion?
It could be, but the problem for the BRICS is that, first of all, they exist since 2009, I believe, and they have been talking about this ever since, and nothing has happened. There is still nothing. So, and it's a little bit fed by also Russian media, and all the people on X are a lot of gold bugs are cheering for it, but they don't really study they don't really check if it's if there's news coming out, if it's really true. So I'm a little bit skeptical, also because for example, in Europe it took them several decades to create a euro, right? This is not very simple. Now, with the BRICS, it could be different because they could have parallel systems. So, for example, China could have the renminbi, and they could have a BRICS currency for trade and all that. So that would simplify things, but it's still very complicated. And it's not like, in Europe, although we have different countries and different cultures, we share a lot of same values,
Right.
like Christianity or whatever. And the BRICS countries don't really share that much. I mean, China and India are even, fighting at the border. So it's quite difficult to, to agree on things, and that's why it can take so long. Also, if you have, for example, issue a new currency that's backed by gold, you need a clearing center, right? So because if you and I trade with each other, and for every shipment we send a plane with gold, that's very inefficient. So we need a clearing center. So at the end of the month, we can say, okay, what are the surpluses and deficits? And so much gold from me goes to you. So where is that clearing center going to be? And do the other countries trust, for example, China holding that gold? So I'm a little bit skeptical. I read a lot of, then they want to, issue a new cryptocurrency, and then it's going to be this and that. And then they say, well, we want to trade more in our national currencies. But also the problem is that they have capital controls in many of those countries. So I don't see it happening very soon, but I can be wrong, of course. And maybe China, for example, is very aggressively the central bank of China, not only the people, but the central bank is very aggressively buying gold at the moment. So they could be up to something, and maybe they will go for a very, let's say, inefficient system and fly gold around or whatever. It's just that I believe it when I see it.
Okay, yeah, that's a statement. That's a clear point. Thank you, Jan, for all your informations, all your statements. Maybe just for the end, let's say two-parted question. First of all, is there anything else our viewers should know about gold and gold-backed currencies that we haven't touched base on? And second of all, how can people follow you if they have just know you and they think it's interesting what you're saying? Where can they read your stuff?
Well, you can follow me on X, and I write for a company in America which is called Gainesville Coins. So you can have a look over there. You can also, I'll always copy my articles on my own website. It's called the Gold Observer. You can have a look there. And furthermore, I don't really have anything to add.
Great, great. So all of your links will be linked below. And Jan, thank you very much for all your insights, all your informations. And I'm happy to to you again pretty soon. Probably not when the BRICS have a new gold currency, that we will probably talk sooner. But thank you very much for all of your insights.
Thank you, Jan.
Thank you.